I think McKinsey's have coined what we do as beyond banking services. So ostensibly what we do is we transform a bank's digital banking platform from something that's purely transactional into the place where a small business runs and operates their business from. And that means we're democratizing things. If you think about a large corporate, they have a finance team. They may even have a dedicated payables team and a dedicated receivables team. What we're trying to do is build that capability through technology and allow small businesses to have the same tools and capabilities that help them with their managing of their business that a bigger company does with people. In the UK, there are 5.5 million small businesses with less than 20 people. It's the same in the US, there are 32 million with less than 20 people. And that's 90% of all private companies, 63% of the whole workforce. And yet banks didn't provide a specific product for those businesses. So they either treated them as a retail plus client. And the fact is that they're not either of those two things. They are the backbone of our economies. They contribute massively to the GDP of every country, whether that's in the developed world or the developing world. And so I felt what we needed to do was build a solution that helped banks give those small businesses what they need.
Hello, Mark. It's a pleasure having you in the show. Thank you.
Thank you very much. Nice to meet you.
Thank you. Thank you. So let's just go into it. This podcast is all about how can we build more purpose-driven fintechs. So what's your take?
So I guess I've been involved in this industry for a lot longer, and it's been referred to as fintech. So I've been doing financial technology to banks for around 30 years. I think something that has happened in the last 5 to 10 years around fintechs in particular is this, in my opinion, this horrible expression about creating unicorns. I think we're losing the sense of what we need to do and why we need to do it. It seems to me that people are now starting fintech businesses and investors are investing in fintechs to build unicorns rather than solve problems and do it for the right reasons and the right way. So I'm very passionate about never being drawn into doing something just doing it for the money. It's all about helping solve particular problems and something you feel very passionate about. So for me, the purpose-driven aspect about it is all about solving the problem and not about making money.
Yes. And I love that you say that because you've been not only in the banking game, but in the fintech game, like for a long time, right? So
Yeah.
Similar to me, that's exactly the words that you used. It's exactly why I started the podcast. Because, no, but it's true because, of course, I was in the UK, then now I'm like in Malaysia for many years, right?
Mm-hmm.
But then, especially during COVID, it started as a passion project, but then it evolved. And then we saw COVID, then we saw crypto up and down. And then I was here. Of course, we've seen the evolution of fintech. So it's been like 5, 7, 10 years. And I was like, could make me angry. The original founders in the UK, I don't know in the US and the rest of the world, but the founders in the UK, like the first cohort, they were really passionate about making a difference. And now I see all these people across the world just like building a fintech for the sake of becoming a millionaire. And I was like, no, I was frustrated. And I was like, the title came so easy to me because it was like, we need to go back to the roots. Yeah. So I'm very glad that you raised that. So what's the purpose of Bankifi then? What made you start it?
Oh, it really goes back to the roots, go back into the mid 1990s. I was working for a cash management business around Australia and Southeast Asia for the business and was doing work with accounting package vendors. And I couldn't understand at the time why there was a different product for accounts, doing your accounting, your bookkeeping, and the nascent days in those days of electronic banking, internet banking, and obviously days before mobile banking. And I guess if you fast forward to 2017 when I set the company up, lots of things had changed and technology had moved forward, and banking had become deregulated. Things like GDPR came into play, open banking. And I realized that banks had really ignored or not serviced their small businesses particularly well. And this deregulation and this change in technology, this kind of perfect storm, if you like, was going to cause an awful lot of problems for banks in terms of the relationship that they had with small businesses. And I looked at the small business market, and in the UK, there are 5.5 million small businesses with less than 20 people. It's the same in the US, there are 32 million with less than 20 people. And that's 90% of all private companies, 63% of the whole workforce, the whole labour force of both the UK and the US work for those companies. And yet banks didn't provide a specific product for those businesses. So they either treated them as a retail plus client. So
Yeah.
they're more like consumers if they're a sole trader, and they're more like a corporate if they've got 5, 10, 15, 20 employees. And the fact is that they're not either of those two things. They are the backbone of our economies. They contribute massively to the GDP of every country, whether that's in the developed world or the developing world. And so I felt what we needed to do was build a solution that helped banks give those small businesses what they need. And I think McKinsey's have coined what we do as beyond banking services. So ostensibly what we do is we transform a bank's digital banking platform from something that's purely transactional into the place where a small business runs and operates their business from. And that means we're democratizing things to, if you think about a large corporate, they have a finance team. They may even have a dedicated payables team and a dedicated receivables team. What we're trying to do is build that capability through technology and allow small businesses to have the same tools and capabilities that help them with their managing of their business that a bigger company does with people.
Yes. And I love that because, like you say, it's like small businesses, well, they are the backbone of most economies. And
Yep.
it's not, I think it's very personal and emotional, right? Like when you run a business, it's not, oh, you have a job and then you have a salary on a fixed date. Yeah, there may be job uncertainty, but you're used to your paycheck. As a business owner, you have to not only be the business owner, but do all of the roles around you. And if you're lucky, you get to have employees at some point. So I
Yep.
think it's, yeah.
We often say that we're trying to solve problems for people like us. So we're a small business ourselves. We see the challenges that every small business faces. And so it goes back to that passion point. If we can solve problems from a position of knowledge, knowing the problems that we face, then hopefully we'll also be able to help lots of other small businesses like us in doing so.
Yeah, I love that. And then one of the, I think you can relate to this. We've seen the industry grow a ton in the past 10 years. In my opinion, yeah, it's grown a ton. We've made a massive difference to customers. However, the problem statement keeps growing. It's like we can see it in stats, whether that's in the UK or in Asia, Latin, like it's across the world. So we need to start changing how we think. What do you think we can do now to have 10 times more impact soon?
Yeah, great question. Actually, I think it's actually quite simple and quite straightforward. We honed in on two particular challenges that a small business faces. And those two things are, they have a lack of time. So there's not lots of people in their organization. So to your point earlier, they do everything. And that means that they are very time poor individuals. And the second thing is they have real problems collecting money from their customers. So they get paid late. And we know that 65% of small businesses in the UK go out of business within the first 2 years of trading, not because they have a bad product or a bad service, but because people don't pay them, so they run out of cash. And so we want to hone in that problem statement is we want to help people get paid more quickly and solve that late payments challenge. Now, the flip side of that, or where that means the bank have a role to play. Banks are very good at selling products. They're great at selling loans or checking accounts or mortgages or savings accounts. They're not particularly good at joining the dots up. So I always liken this to when people talk about payments, the bank thinks that the payment is a product, but actually there's a whole workflow that goes around that payment. So on the supplier side, it's probably that the customer has received a purchase order and they then receive an invoice, they then make the payment, and then they have to do some financial administration behind it. And we call that process the accounts payable process. Similarly, if you issue your customer an invoice and they make a payment to you, and then you have to do the bookkeeping in your systems, that's the account receivable process. Banks don't think like that. They think payment, whereas businesses think workflow and process. And I think where we can make big gains into solving this late payments challenge is if the banks start to think more like their customers do and actually understand the needs and the pain points of their customers, rather than thinking I need to sell them a mortgage or a loan or a checking account or a savings account. So I think it's about being much more customer centric in the way that you build product proposition and tie it back to your own pain points in your own organization. So for example, banks today in a high interest economy, which we haven't seen for 10, 15 years, borrowing money off the wholesale markets is very expensive for financial institutions to fuel their loan book, as they all make money from net income margin. So really what they're all trying to do is get those small businesses, of which there are, in the UK alone, there are 600,000 new businesses every year. If they can open their checking account with you, your bank, and they put money on deposits in your bank, that's the cheapest way to fuel your loan book, whether or not that's your residential mortgage book or whether it's your small business. So the war on deposits needs to be tied into how can I help solve the customer pain points, so that I then have a proposition that they're more likely to open a bank account with my bank than they are with my competitor bank. I think we have to be able to bring the two parts together, which is what do the small businesses need and what do the banks need. And propositionally, if you can solve the small business pain points, you by definition will solve your own pain point of cheap deposits into checking and current accounts.
I have a genuine, I think it's culture curiosity question. I've been in fintechs now for 10 years, right? So this idea of seeing the problem from the customer side and getting close to customers, for me, it's like
obvious, yeah.
So my question to you is, because your customers are banks, so you're close to them. If we go to the big conferences, the fintech conference, banking conferences, that's what we say, right? Like, from a customer perspective, this, the other. But what's happening inside the banks that it's still not happening?
So I think it's really easy to say, oh, banks don't get it, or they're taxed, or they live in their ivory towers and they don't understand it. I think that's far too simplistic and easy. These organizations have very smart, very capable, very intelligent people inside them. But I think we also have to remember that they are highly regulated. They have lots of compliance requirements. They don't have lots of discretionary spend. And they have to be first and foremost, they have to protect our money, whether that's us as individuals or businesses or large corporations, right? They are there to protect the deposits and the money that we have, and they have to make sure their payment systems work and so on and so forth. So I think it's too easy to say that they don't understand it. I think they've got an awful lot of things on their plate. And actually, what I think's happened in the fintech space, I describe the fintech kind of revolution in three phases. The first phase was where these, in my opinion, lots of arrogant fintechs came along and said, we can just do this much better than banks and we don't need banks, we can get rid of them. I think Bill Gates said that in the 1980s, maybe 80s or early 90s, we need banking, we don't need banks. Lo and behold, banks are still around, and they've been around for 300 years and they'll be around in the next 300 years. And I think then there was a realization, and that kind of made the banks sit back and go, we don't want to work with these arrogant little fintechs because they're going to try and disrupt and eat our lunch and take away our customers and so forth. And that, I think, was phase two. I think what's happened in phase three, as a consequence of the market correction around easy money being made available to fintechs, and they've raised massive amounts of money on very hyperinflated valuations, there's now a realization that actually both parties need one another.
Yeah.
And I think that phase three of the fintech revolution, if you like, will be banks and fintechs working in partnership to solve customer problems and bank problems, and to not just use technology that looks for a problem to solve, but actually use technology that's genuinely solving problems. And I think, as I say, the fintechs have realized that banks do know what they're doing. They are making decisions slowly because they have to make decisions that, in the lens of regulatory and compliance and financial crime and all these other things, they have to get right, because if they don't, we will all be in big trouble.
Yes. I love that description, because not the description. I love that way of thinking, because like you say, it's very easy to judge.
Yeah.
It's easy to judge. And whether you work in a big bank or you work in a fintech, some days you're like, oh my God, this is hard, right?
Yeah.
Whichever way you look at it.
Whichever way you look at it, yeah.
Yeah. And then it's maybe in addition to banks and fintechs working together, it's also how can we build the regulatory frameworks to keep our money safe and keep customers at the center of at the heart of what we do.
Look, I've been asked that question a lot of times. People asked, have the UK regulators got the balance between regulation and flexibility and innovation right? And are there other countries that do it well? And are there other countries that do it better? And I think I personally think the UK regulators have got it spot on. I think there is a reason that the UK is seen as the kind of poster child for fintech. And that's because the deregulation or the relaxation of some of the high bar is right. And we still have a highly regulated environment. And it's right and proper that fintechs need to have a high bar.
Yes.
We can't create the Wild West.
Nope.
We all know what that would do if we went down that path. But I also think, you mentioned the word cultural a few minutes ago. I think there are lots of cultural differences between different parts of the world. I've had the privilege and the fortune to work in lots of different parts of the world throughout my career. And there's no question for me that you can't have a one-size-fits-all model. You can't have a cookie cutter that says if I'm successful in one part of the world, and I just take it and replicate it. Best example of that, everyone talks about M-Pesa in Kenya as the way that mobile banking took off. That's because a significant proportion of the population are unbanked, right? That model clearly wouldn't work in the UK or the US. No. I think places like Brazil with Pix and India with their fantastic models around payments and unique identifiers. Though that works in their countries, Brazil with Pix, that's because massive amount of usage of cash, inflation, hyperinflation, all those things that lots of other countries don't have. And that's why that country built and saw an opportunity to build a fantastic new infrastructure, which is brilliant for its people and its businesses. So I think we have to be very aware of cultural differences around regulatory frameworks, around business models, around what usage of payment products are. The US is massively addicted to credit cards, cashback, loyalty points. That's not the case in lots of other parts of the world. So yeah, I think it's a horses for courses approach as opposed to a one size fits all approach.
Yeah. And I want to build on that because I think it's spot on. Like you say, like Brazil, Southeast Asia, we still need to do a lot of work when it comes to bringing everyone into the system. But if we look at a country like the UK, most people have a bank.
Yeah.
Right? Yeah, it's like most people
In fact,
have a bank.
More than one is the interesting thing that's proliferating here is lots of people are now multi-banked, which is causing some different challenges for the financial institutions, but great for the consumers, right? That's what competition does.
Yes, but it's even though everyone has a bank account, that doesn't mean that they have good financial well-being.
Very true.
So, because it is true. So how do we, in the context of the UK, you made me think now, it's in the context of Southeast Asia and LATAM, it's like, how do we innovate? The answer that comes like this is accessibility, because, and to keep it simple, and the language.
Mm-hmm.
So, but in the UK, where almost everyone, not almost everyone has a bank account, and everyone has access to different ways of payment methods, like it's a mature market. How do we innovate in the UK?
That's a great question. And I think we often get hung up on innovation for innovation's sake and technology for technology's sake. I think if you look at the massive hype around blockchain a couple of years ago and applying blockchain to the payment system and having central bank currencies, central bank digital currencies, and so on and so forth, we always go on these hype cycles. And I think within the industry, you can get drawn into this navel gazing about what innovation means. But if you actually go and speak to users on the street, I think there's far more short-term problems that need to be resolved than radically changing our payment systems just to use the latest and greatest technology. You know, we've had instant payments in the UK since 2008 on a very old, antiquated platform called ISO 8583, which is going to be replaced next year with ISO 222. People on the street couldn't give a monkeys about that. They just don't care. What they know is that their money goes from A to B in real time or very near real time. Right? And we should be proud of that. Let's not try and innovate just for the sake of innovation. Now, where I do think, and again, I'll put that in the context of what we do and why we do what we do, where I do think innovation needs to happen is what's the role of a bank in the small business area? As I said earlier, is it just to provide products like current accounts or payments or loans, or is it to actually go beyond that and help businesses with beyond banking things? Could they help with digital tax returns? Could they standardize invoicing? Could they help with matching and reconciliation problems? So I think the innovation shouldn't just be around trying to replace something that works well with something that works marginally better, but actually getting into different spaces that are adjacent that actually help the short-term problems. People talk, we're all massively hyped up about end-to-end. large language models and generative AI and all this kind of stuff. Again, if you talk to people on the street, there isn't even 100% penetration on mobile or internet banking yet. And that's been around for mobile banking, certainly for 15 years, internet banking for probably 20, 25 years. There still isn't 100% penetration on that. People still use cash. How long do you think it's going to be before people want to adopt AI into their general ways of working? I just think in the industry, we can get a little bit hyped up about technology for technology's sake, rather than actually solving problems that exist today and in the short term.
I like your way of thinking in terms of kind of solving adjacent problems, that it's not just a financial product.
Yeah.
And because I see it more from the consumer side, right? And then many times I think about it and I'm like, I can give you the best money management tool ever. There's many out there and AI will make them even better.
Yeah.
But inflation is so high.
Yeah.
My salary hasn't gone up. So I struggled to pay for stuff as much as I manage it really well.
Yeah.
I need more money. People need more money. So in my mind, I keep thinking it's not that we need to stop doing money management tools. We need them, but it's more of it could be amazing if we as fintechs can help customers to make more money.
Yeah.
Same like you're saying, it's not provide a better SME solution. It's the adjacent parts.
It's to help them. As I say, if you look at their 60% of them go out of business in the first 2 years of trading because they're not getting paid on time, right? If you can give them tools that help them collect money from their customers more easily. A great statistic from our user base is the average credit terms in the UK is 30 days, and invoices has 30 days credit on it. And the average it's taking those businesses to collect their money is 55 days. So that means there's 25 extra days where a lot of businesses are waiting to be paid. With our product, we are issuing invoices through our bank partners branded as the bank. The collection time for 80% of the invoices that we issue is 1 day. That's not 1 day after the invoice terms, that's 29 days before the invoice terms. So that means that the business is getting their money much more quickly, and therefore they're much more likely to survive. And by the way, the bank's getting their money 29 days beforehand, which is fueling their deposit book. And this is what I mentioned earlier about the dual language, right? You solve the business's problem by helping them get paid early, and you also solve a problem for the bank because the money's going into that non-interest bearing account 29 days before it would do.
Yes, I think you just gave a beautiful example of the definition of a great product. And one of the guests the other day was it has to be when I'm speaking with a bank, he was selling same software for banks. He was like, when I'm speaking to the bank, then to them, it's a no-brainer to use a product. And then you're saying as a small business, I need to wait 55 days versus I saved 29 days. No-brainer.
Sure. But again, and this goes back to my comment about fintechs understanding how banking works, right? And I think the kind of missing link, if you like, is the so what for the bank. And a lot of times the fintech thinks about the so what for the end customer, but they don't think about the so what for the bank. If they don't think about the so what for the bank, then the bank isn't going to do it, because unless there's something in it for them, then they're not going to buy. And I think there's this kind of, sometimes there's this sort of this bleary-eyed utopian view of the world from fintechs that they'll take the world over, and as long as they can create a beautiful customer experience, everything will be fine. The world doesn't work like that. Unfortunately, there has to be either, from the bank side, it reduces cost or it generates revenue, or ideally it does both, and or it reduces crime, financial crime, and it helps with KYC, KYB. And going back to my comment earlier about how it has to help in all of the aspects of this highly regulated, highly compliant environment, and it needs to help them make money or reduce cost, or as I say, preferably both.
Yes. And basically what you're saying is banking is complex.
It is.
Yes.
And banking organizations are complex. They're very siloed, they're very organizationally fractured, and you never get a decision from one person. It's always decision by committee. And there's lots of people involved in influencing that decision. And that's why it takes so long to sell to them, because you have to win the hearts and minds of lots of different parts of the organization. And again, that's something I don't think the fintech industry particularly understands. It's only when you've been dealing with them for years that you realize how they operate and what you need to do.
I was thinking exactly that as you were thinking. I'm like, this is a masterclass of someone who's been working in the banking industry for years, because you can describe how they work for real versus fintech. It's more of a, depending on the type of fintech, of course, but I can see you speak from experience. This is how it works.
I think goes to there's lots of people that want to start their own company, whether that's in a fintech or another industry vertical. It's almost become a kind of almost like a cool thing to do, right? Become an entrepreneur. When I was a kid, when people used to ask me what would I want to do when I grew up, I'd say probably a pilot or a train driver or something. Now it's, I want to be famous. What do you mean? You want to be famous? Famous for what? Or I want to be an entrepreneur. I think you have to be an entrepreneur, or to be someone that makes a difference in the space that you operate within. You have to understand the domain, and you have to understand the problems that you're trying to solve. You don't get straight out of school or straight out of university or working in an industry for 12 months unless you are incredibly visionary or fortunate, or probably both.
Both.
But I do find it really intriguing to see all of these people that come into the industry and think that actually it's really straightforward and easy to solve the problems that we're trying to solve. And it's not, because as you pointed out, the financial systems, the banking system, banks, payments, they're actually pretty complicated things. And funnily enough, if it were easy to solve it, everybody would be doing it and it'd be easy, but it isn't.
Yeah. So given all these complexities, what's your definition of a great product in our industry?
That depends on the angle that you're looking at it from. I would say from the customer's, the end user's perspective, I think it's something that makes their lives easier, that solves a real problem for them, that's intuitive, that is straightforward to use. So from digital product perspectives, I think it has to be all those things. From the bank's perspective, as I said earlier, I think it has to tick an awful lot of boxes. So it has to be, first and foremost, it has to be secure and safe. It has to be available. It has to perform. It has to be bulletproof. It has to be resilient to cyber attacks. It has to be compliant. It has to be always available. It has to be 99.999999% of the time available. It has to be able to be fixed quickly if it breaks. It has to be able to replicate from one data center to another if it breaks very quickly. And first and foremost, it has to meet the regulatory and compliance bars that are very high. And then last but not least, importantly, it either has to do what it's replacing better, cheaper, faster, with less people, that reduces cost, makes more money, and increases profit margins. So I think I've been through almost everything that you'd get in a request for proposal from a bank when they go. Mostly, it's not about feature functions. It's about all the other things that it needs to do that does not introduce a liability to the bank. And as a vendor, the downstream regulatory requirements that banks have to look at organizations like mine and any other supplier into a bank, that's also, you have to tick all the boxes that they have to tick. Right? And this is, again, an example of, if you don't know the industry, you have no idea what you need to do to make sure that you are able to be onboarded as a vendor and a supplier and not introduce any further risk to the way that those financial institutions operate.
Exactly. I love how you describe it, like the honesty. It's, if as you listen what you were saying, as I was listening what you were saying, I was like, this sounds very complex. But it is complex.
It is complex.
It is complex. Years ago, another frustration that is also why I started the podcast, I was like, people go into fintech thinking that it's like sexy. They come to me and it's, oh, I want to get into fintech. It's cool and sexy. I'm like, no, fintech is not cool and sexy. On the contrary, it is difficult. It is complex. It's even boring, but it's very exciting. Like, yeah.
Yeah, I think you have to be a certain type of individual to find it sexy and fun. But you know what? I do.
Yeah,
and
me
I
too.
think it can be all those things, but it can also be very methodical, and a lot of box ticking and a lot of procedural and methodology things are equally as important as all of the fun bits of innovation. And I look at it, if you could describe it as an iceberg, or where you see the tip of the iceberg is the bit that goes in the customer's hand and their cool user experience, but everything underneath the water is much, much bigger and vast, or like a duck swimming on the water. You see the ducks in this serene, cool, calm way of beautifully swimming along as if nothing's moving, and you go below the water and its feet are pedaling at 1,000,000 miles an hour. It's a good analogy.
Yeah, I think it's a beautiful analogy. The dog analogy, it's the real one. Perfect. Okay, so I'm going to change gears. So, of course, we have to talk about AI. While everyone is talking about AI and machines, basically, you're talking about human interaction. Can you tell us more?
Yeah. It's really interesting. So the model that we have at Bankifi, and the client base, or the end user client base that we're trying to service, is that 0 employee to 20 employee, don't have a finance department, need technology to help them. And equally importantly, they don't have a relationship manager from a bank, because the bank has typically decided it's too costly to service customers like that who don't necessarily generate them lots of revenue, margin, profit, etc. We took a different view based on some feedback that we saw in some business reports, that lots of small business customers want access to a human being. That doesn't mean they want to go into a branch with expensive bricks and mortar, but they want the ability to talk to customers, or talk to their banks, I should say. So we have an engagement team. You've probably heard this kind of fashionable expression in the fintech space, digital, which is a combination of physical and digital. So we have a team of people that actually speak to the end users and ring them up and ask them questions about their business and their pain points and their problems. We learn, I was going to say as much, but I'd probably say far more about those businesses than we ever do from the analytics that you get in the application, in the digital application. But when you combine the two things together, the inferences that you can make from the data and how the product is used is fabulous. So, the best way that I can articulate how powerful that is we recently was working with one of our bank customers who were talking about launching some new services. they thought a particular service was very important, a particular feature was really important and was a cornerstone of their requirement. And we were able to challenge that with data and evidence from talking to the customers that actually nobody has ever asked for that particular feature. And so we were able to make that feature become much less of a priority in the bank's wish list of things that they wanted to do. So point about having a relationship with your customer on a physical level, telephone, definitely not automated chatbots. Everybody, in my experience, doesn't really like those because they're not good enough. They can only answer a very limited number of questions, and they're typically not the questions that the difficult, intricate questions that people have about their own particular problem. Those chatbots are just not going to cut it. And actually, they become more of an off-putting irritant than they are as a help. I'm not saying that AI doesn't have a place in things. On the contrary, it has a huge role to play. But I think that's going to be in spaces that we're perhaps thinking are not, or we're not necessarily thinking about at the moment. I think in terms of productivity, efficiency improvements, definitely, but not necessarily in customer-facing roles just yet. And definitely not replacing human interaction, because lots of, as I said earlier, the average people on the street, they're actually petrified of AI. The hype that they're hearing about it is frightening to them. Am I going to lose my job? Am I going to be replaced? And I actually think businesses that keep humans interacting with the general public will actually benefit, because I think there is a lot of fear and scaremongering out there about what AI will or will not do. And so, yeah, we have a very much a digital and physical approach to end users and understanding those end users, and get a much better picture by having that approach.
Yes. And then, like you mentioned, exactly in this approach, we have the human touch and then we have data. Bankifi, your solution, how does it help customers, e.g. the banks, get access to that data
So,
or insights?
yeah, we talk a lot about what we call value exchange. So if you ask a customer to do something, they have to get something back in return. And a great example of that is how we've helped build cash flow forecasting. As I mentioned earlier, a lot of businesses in the UK are now multi-banked. And so our cash flow forecast module allows the bank, through its service that we provide, a branded service that we provide, to connect any bank account in the UK that customer might have an account with. And that requires them to use the open banking connectivity that we have here in the UK. But if you're going to ask customers to share their information from another bank, or from their accounting package, or from company's house or tax department, you have to give them something back. And the thing that you're giving them back in this context is letting them understand what their cash position is going to be, and not just giving them the ability to see what would happen if everything went swimmingly and normally, but allow them to play around with what happens if this customer doesn't pay me, or what happens if I don't pay that supplier, or what happens if this one-off transaction comes in, how is that going to affect my cash position? So the value exchange is giving them something in return that helps them run their business. They're much more likely to give you access to their data, and because it's giving them something of benefit. So we use that expression of value exchange a lot, and getting the consensual access and the sharing data within the constraints of general data protection and marketing rights and consensual access to use their data for the purposes that you're talking about it being used for is fundamentally important. Really, the glue of these services is about this value exchange. If I'm going to give you something as a customer, I want something really valuable in exchange.
Yes. And I think you used an example, a real life example of basically how you are living and breathing, putting customers at the center, right? Because then you're saying, hey, I am not just showing a dashboard to businesses. I am helping them think, oh, what if this payment is late? Oh, this could happen. What if basically
Yeah.
you're helping them answer all the questions that are going through their heads? It's not just
Yeah.
like another dashboard.
A really good example of that we talk about all the time is when people issue an invoice, and this goes back to my point about a process flow and joining the dots of how a business thinks versus how a bank thinks. When you issue an invoice as a customer, you're basically asking that customer to pay you. I've done some work for you, or I've sold a product to you. Here's the invoice. I would like my money for what I've given to you, is basically the message that the invoice delivers. It astonishes me how many banks have got an invoicing service. So they issue the invoice, but they give no mechanism whatsoever for the customer at the other end to pay the invoice. So what we do is exactly that. With our invoicing service, we issue the invoice, we give various payment methods to the customer to settle that invoice. And at the end, we then do all of the bookkeeping in their accounting package so that they don't have to do anything. So that whole process is spawned by issuing the invoice, and everything else is automated in terms of, apart from the customer at the other end choosing to make the payment. But as I said earlier, 80% of those invoices are paid within 1 day. So that's a great example, I think, of showing a lack of thought process. What is an invoice? An invoice isn't just a piece of paper that records. It's a request for payment. So give them the ability to make the payment and join up the dots and make it all happen in an easy to use, slick, automated process that they don't have to then make awkward phone calls to chase up people who haven't, or say, oh, here's my branch bank details and my account number, make this payment. Just give them everything in an automated workflow.
Yes. And as we're like getting to the end of the episode, I want to go a little bit deeper, because then us as banks, the big challenges that we have is acquire customers and then keep them engaged. How? Because like your solution, it's very comprehensive, but I want to hear from your words. How does the solution help us keep customers engaged? How do we solve for that engagement proper?
And I think that goes back to lots of things that we've talked about over the last half an hour, 45 minutes, however long it is. So we've been chatting away. It's gone very quickly, but
Yes.
I think it's all about understanding what their problems are and giving them solutions to those problems and doing it better than your competitors. So you constantly need to be, and by the way, competitors aren't just banks. If I look at what the online accounting package vendors do, or the payment processors like the Stripes and the PayPals or the Shopifys of this world, they do small businesses really well. They provide really good features and capabilities, and they have set a high bar for banks to raise their game to. So when banks think about staying ahead of the game, it's not just about staying ahead of other banks, it's about staying ahead of other parties that service the small business community probably better. But yeah, as I say, it's all about solving real world problems, making people's lives easier, saving them time, getting their money in quicker. And that requires you to be constantly evolving and understanding what your customers need and requirements, which, as I said earlier, that also requires you to talk to them, because no app or AI is going to be able to tell you or guess what the problems are in that particular business's organization today, tomorrow, or next week.
Yes. And I'm going to go even deeper on that, because basically what we're saying is it's the human touch, it's people. So
It is
all of
people.
this is possible because of the people working in the business, as
Mhm.
in Bankify, right?
Yeah.
And you're the leader. I'm like, what? How do you bring the best out of people to and have a high performance culture?
So I've had the benefit of working in several organizations, mainly small companies. The previous fintech that I was on the executive management team of, that we ended up having 2,000 people before we sold the business. But I started there, I think I was something like employee number 10. And so I grew with that business and saw how that evolved. And I think you learn a lot about what not to do as well as what to do. And I think what I've tried to do in creating a culture in Bankifi is try and eradicate all the things that I didn't like in the other companies that I worked at, in creating an environment. And then I think the other thing that we can't shy away from is COVID had a massive, profound effect on cultural working habits and so forth. But actually, we found COVID really easy because we already had a model where it was flexible working, right? We have lots of people in lots of different locations in the world. So we were a distributed workforce that didn't require you to be tied to an office. And our whole methodology and model was built around that. And that presents its own challenges, but it also meant that we didn't have to do anything radical or different when COVID came along. Ironically, the challenge has been making sure that you get communication and learning and all those things that you miss from being in an office together with people. But I think fundamentally, respect is a really important word. So you respect people for what they do, how they work, how they operate. We have a very flat structure. I don't believe in hierarchy. I don't like hierarchy. If you've got people working for, I think, firms that have a pyramid of partners at the top and everybody else that's working for the partner, I don't like that. That sounds very hierarchical, very unfair. And I think respect and making everyone aware and believe that their job is as important as anybody else's, including mine, is really important. And just empowering people to do what they do and not make them frightened of failing or making mistakes, as long as they learn from mistakes and don't repeat those mistakes. Trust is another massively important word, where you don't need to be in an office to measure whether people are being productive or not. You can see and feel. And you can also have the team become self-policing, right? If you build a culture that says, you know what, everybody has to chip in. I'm a big sports fan. I've been around competitive sport, both playing and watching all my life. And a team functions when everybody does their job. And a team doesn't function when somebody doesn't do their job. And it is up to the rest of the team members to call out that one cog or those two people that aren't pulling their weight. Big football fan. Is the centre forward more important than the goalkeeper? No. Is the centre half more important than the right midfield player? No. They're all equally important in that machine and that the way it operates. So it's about flatness. It's about team spirit. It's about all working together in the same way, all having the same goals, but also having the freedom to call out people, and not just the so-called management, but anybody call out anybody else if they're not performing and doing the jobs properly.
I like that. Yeah. It's like a very, like a team.
It is.
It's like
It is.
a genuine team. It sounds like a
Yeah,
team.
it's exactly what it is. Yeah, and teams don't have hierarchy. It fascinates me that you look at competitive sport, team sports, whether that's football, hockey, American football, rugby. You go through any of this, there is no hierarchy. It is flat. Everybody does the same, works all the same go. So why do we translate that into a business world that says hierarchy is the way to operate? Because it isn't, clearly. Somebody will benefit more than somebody else in a hierarchy. It's wrong.
Interesting. I love that kind of reframe. I love it. It's been a fascinating conversation. Thank you, Mark.
Those-
Before we go, just one of my favorite questions. If we were to change one thing in the industry that has most impact to that has the most impact to customers, staff, and shareholders, what could that be?
It's interesting. You've hit on my favorite pet topic, which is the world that we live in has made shareholders and shareholder value the be all and end all. And we all talk about driving shareholder value. I find that very weird, very bizarre. And actually, if you look at the way I would like to see the world change and evolve, and this would address all sorts of things, not in the least the gap of pay between executives and employees, but the most important people in any business context are your customers. The next most important people are your employees. And if you do right by both your customers and employees, your shareholder value will look after itself. So that would be the fundamental change. And it's not necessarily a change of structure or formality. It's actually a subtle change of emphasis about what's important. And you know what? I do worry that the world that we live in is getting it so wrong with respect to as I said a minute ago, the gap between executive pay and employee pay and the profits over performance or I just think we've got it all wrong, and we need to readdress that, and we need to get the balance, because if we don't, then I think social cohesion possibly on the breakdown.
Yes, and probably that sounds like a topic for another podcast altogether.
I think so.
Thank you, Mark. It's been an amazing pleasure having you in the show. Thank you.
Thank you, Monica. I've really enjoyed talking to you. Thank you.
Me too. Thank you. Everyone, see you next week. Ciao, ciao.